Kevin O'Leary loves to tell you that your $5 latte is the reason you're not a millionaire. He sits in his leather chair, looking at the camera, telling you that if you just skip the caffeine and threw that pocket change into an index fund for 40 years, you'd retire with a golden parachute. But let's get one thing straight. In 2026, that advice isn't just outdated, it is actively dangerous. The world has changed. The math has changed. If you are still trying to save your way to wealth by cutting out small luxuries while the cost of living, housing, and energy are inflating at a rate that swallows your savings whole, you aren't being disciplined, you're being delusional. Saving pennies in a collapsing fiat system won't make you rich. It will make you a very disciplined poor person. The Lattes to riches myth is a distraction designed to keep you focused on the micro, while the macro elites strip mine your purchasing power. While you're stressing over a cup of coffee, the central banks are quietly re-engineering the entire global financial architecture. They don't care about your savings account because they know that cash is trash, has evolved into cash is a trap. If you are still broke in 2026, it is not because of your Starbucks habit. It is because your strategy belongs in 1995. You are playing a game with rules that were rewritten while you were sleeping. The middle class is being hollowed out, not by consumerism, but by a lack of financial agility. Wealth today isn't about how much you keep. It's about where you deploy, what you have, even if it's just your first $100. I'm not here to give you feel-good financial advice or tell you to wait 40 years for a compound interest miracle that the dollar's devaluation will eat anyway. I am going to show you exactly how the most powerful institutions on the planet are moving their capital right now. I'm going to show you the secret asset they are vacuuming up while I tell you to stay calm and keep buying the S&P 500. Stop looking at your coffee. Start looking at the ledger. I'm going to show you exactly how to flip $100 into a legitimate fortune this year by front-running the very banks that want to keep you in the dark. If you aren't ready to hear the brutal truth about why your current safe strategy is a death sentence, turn this off now. But if you want to know what they aren't telling you, pay very close attention. Why the celebrity advice is dangerous. The biggest mistake you're making right now is taking financial advice from people who have already won the game. When a multimillionaire like Kevin O'Leary tells you to stop spending and start hoarding every cent, you have to understand the perspective he's speaking from. He isn't worried about his rent doubling. He isn't worried about the price of eggs or gas. For him, saving is a hobby. For you, it's a trap. This celebrity advice is designed to cultivate one thing: a scarcity mindset. And a scarcity mindset is the fastest way to stay broke forever. Being cheap is not an investment strategy. Let's be brutal. You cannot save your way out of a systemic collapse. If you take that $100 you were going to use to build a skill or start a side hustle and instead put it in a glass jar or a high-yield savings account, you aren't investing, you are surrendering. By December 2026, that $100 will have the purchasing power of $80 or $90. Inflation is a hidden tax on the poor and the cautious. While you're feeling proud of yourself for skipping a meal to save a few bucks, the purchasing power of those saved dollars is evaporating in real time. The rich do not save in the way they tell you to. They multiply. They understand that money is a tool, not a trophy. When the elite talk about saving, they are talking about capital preservation for their massive estates. But when you are starting with a small amount, your goal isn't preservation, it's aggressive expansion. If you adopt a scarcity mindset, you stop looking for opportunities because you're too busy looking for coupons. You become risk averse at the exact moment in history where safe assets are the most dangerous things you can hold. By following this Mr. Wonderful logic, you are essentially playing defense while the banks are playing an all-out offensive. They want you focused on the micro pennies so you don't notice the macro shifts. They want you to stay in the save and pray lane while they use high-velocity capital to snap up the assets that actually matter. If your entire financial plan is built on don't spend, you have already lost. You aren't building wealth. You're just slowing down your descent into poverty. Real wealth is built through the strategic deployment of capital in assets that the banks are currently terrified you'll discover. It's time to stop being cheap and start being calculating. If you want to move like the 1%, you have to stop thinking like a victim of inflation and start thinking like a predator of opportunity. The poor versus rich mindset shift. If you want to understand why the gap between the ultra-wealthy and the struggling middle class is widening into a canyon, you have to look past the bank balances and look at the behavior. Most people are poor not because they don't work hard, but because they have a fundamentally broken relationship with their capital. They treat money like a finish line, something to be reached, and then immediately spent rather than a seed to be planted. This is the poor versus rich mindset shift that determines your entire financial destiny in 2026. Let's look at a concrete comparison. The Garib or poor mindset sees $100 as a ticket to temporary status. They take that $100 and spend it on a pair of branded shoes or a trendy jacket. The moment those shoes hit the pavement, they lose 30% of their value. In 2 years, those shoes are worth $10 at a thrift store, or more likely, they're in a landfill. The Garib mindset buys liabilities disguised as assets. They seek the appearance of wealth because they lack the substance of it. They're trading their life energy, the hours they work to earn that $100 for a piece of rubber and fabric that will never pay them back. On the other side, the Amir or rich mindset looks at that same $100 and sees a soldier. Their goal is to send that soldier out into the world to capture more soldiers. They spend that $100 on an asset. It might be a fractional share of a tokenized property, a small amount of silver, or a subscription to a data tool that gives them an edge in the markets. In 2 years, that $100 hasn't just retained its value, it has paid them dividends, appreciated in price, or provided the knowledge that generated $1,000. One person bought a depreciating piece of trash. The other bought a cash flow engine. The most toxic lie you've been told is that you need real money to start investing. You've convinced yourself that you'll start once you have $10,000 or once you get that promotion. This is a trap. The biggest mistake you're making right now is waiting for enough money to start. By the time you think you have enough, the opportunity will have already been priced out by the people who started with $100. In the 2026 economy, speed beats size. At $100 is all you need to enter the arena. If you cannot manage $100, you will never be able to manage $100,000. The rich don't wait for the perfect conditions. They create them by being positioned correctly before the masses arrive. While the Garib mindset is waiting for a sign or a windfall, the Amir mindset is already in the game, however small the entry. If you have $100 in your pocket right now, you have the seed capital for a fortune. The only thing standing in your way is the urge to look rich rather than actually being rich. You have to decide if you want the clout of a new pair of shoes or the power of an appreciating asset. One makes you a consumer, the other makes you an owner. The banks want you to be a consumer. They want you to keep spending that $100 on junk so they can use your collective deposits to buy the very assets you think you can't afford. It's time to stop funding their empire and start building your own. The shift starts with the very next dollar that touches your hand. You have your $100. You've killed the scarcity mindset. Now we move from theory to execution. In 2026, the financial landscape is a battlefield of volatility and rapid technological shifts. You cannot just throw money at a hot tip and hope for the best. You need a structured, tiered deployment strategy that balances systemic safety with aggressive growth. This is your 3-tier $100 blueprint. Tier 1, the safe base, $40 in index funds, ETFs. 40% of your capital goes into the bedrock of the global economy. This isn't about getting rich overnight. It's about ensuring you aren't wiped out by a single company's failure. In 2026, the two gold standards remain VO, Vanguard, S&P 500 ETF, and VTI, Vanguard Total Stock Market ETF. Why VO or VTI? Because when you buy these, you are buying the 500 largest, most resilient companies in America or the entire US stock market. You are betting on the collective ingenuity of millions of workers and thousands of CEOs. Even if the dollar is being devalued, these companies own the factories, the patents, and the brands that people must buy. By putting $40 here, you are creating a safe base. If the market averages its historical 10% return, your $40 is working while you sleep. More importantly, it acts as your psychological anchor. When the speculative stuff gets wild, your base remains steady. This is the foundation upon which your empire is built. Tier 2, the future engine, $30 in tech AI. The next $30 is your offensive line. We are in the middle of the greatest technological upheaval since the Industrial Revolution. In 2026, artificial intelligence is no longer a buzzword. It is the operating system of the world. You don't need thousands of dollars to own a piece of the companies building this future. Thanks to fractional shares, your $30 can buy you a slice of the giants. You should be looking at the enablers and the infrastructure of AI. The chip giants, companies like NVIDIA or AMD that provide the hardware. The cloud powerhouses, Microsoft or Amazon, who own the servers where AI lives. The data arbitrators, companies like Palantir or Google that turn raw information into profit. This $30 is your growth engine. It is higher risk than your safe base, but it carries the potential for asymmetric returns. You aren't gambling. You are positioning yourself in the path of inevitable progress. While the average person uses AI to write emails, you are using your $30 to own the companies that make the AI. Tier 3, the ultimate ROI, $30 in self-education. This is the most critical part of the script. The best ROI in 2026 isn't a stock, a coin, or a bond. The best ROI is your own skill. Now, the world is changing so fast that the knowledge you gained 3 years ago is likely obsolete. If you take your final $30 and buy a specialized book on prompt engineering, a month's subscription to a data analytics tool, or a course on high-ticket sales, you are investing in a cash machine that can't be inflated away. Think about the math. If you put $30 in a stock and it doubles, which is rare in a year, you have $60. If you spend $30 on a skill that allows you to earn an extra $500 a month as a freelancer or a consultant, your ROI is 2,000% per month. Banks can freeze your accounts. Inflation can melt your savings. But nobody can take a high-value skill out of your head. In 2026, the secret asset isn't just what the banks are buying. It's the ability to provide value in a world that is becoming increasingly automated. Spend this $30 to become the person who manages the machines, not the person replaced by them. The final tally, $40 ensures you survive. $30 ensures you grow. $30 ensures you are irreplaceable. This is how you turn $100 into a fortune. It's not about the amount. It's about the architecture of the investment. You are now moving like the 1%. You have a base, an engine, and a skill. Now, the only thing left is the discipline to repeat the process. If you want to survive the 2026 economic shift, you have to stop bleeding capital. The banks aren't just getting rich by buying the right things, they are getting rich because they've convinced you to buy the wrong things. They need you to stay in the cycle of disposable consumption so they can keep your velocity of money high and your net worth low. To protect your first $100 and every dollar that follows, there are 3 specific investments that are actually financial suicide in 2026. First, fast fashion and hype clothes. We are seeing a massive cultural trap where people spend $200 on a polyester hoodie because it has a specific logo or a limited drop status. Let's be brutal. The moment you cut the tag off that garment, it loses 90% of its value. It is not an asset. It is a depreciating fabric liability. In an era where the cost of essentials is skyrocketing, wearing your net worth on your back is the ultimate signal of financial illiteracy. The 1% are wearing high-quality, unbranded basics that last a decade. The Garib mindset is chasing a trend that expires in 6 weeks. If it doesn't pay you to wear it, don't buy it. Second, new cars on debt. This is the classic interest trap. In 2026, with interest rates remaining volatile and the subscription model full, features becoming standard, buying a brand new car on a 72-month loan is madness. You are paying interest on a tool that is losing value every single mile you drive. You are effectively working for the bank's auto loan department. The rich buy cars that are 2 to 3 years old in cash, or they lease through their businesses for tax advantages. They don't let their transportation eat their investment capital. If your car payment is more than 10% of your income, you are driving a car, you're driving a cage. Third, get-rich-quick crypto schemes and meme coins. While the banks are buying tokenized real-world assets with actual utility, they are laughing as retail. Investors dump their life savings into dog-themed coins or moonshot tokens with zero underlying value. In 2026, the Wild West era of crypto is over. Regulation has arrived, and the pump and dump schemes are failing faster than ever. If a coin has no utility, no revenue stream, and no institutional backing, it isn't an investment, it's a lottery ticket where the house always wins. Stop being the exit liquidity for the whales. Every dollar you spend on these three traps is a dollar you've stolen from your future self. In 2026, the secret asset is your discipline. By simply not buying this junk, you are already ahead of 90% of the population. 2026 is going to be remembered as the year of the great. Divide the year where the gap between the informed and the distracted became an unbridgeable chasm. It is going to be the year of the smart investor. While the masses are waiting for the government to save them or for the old system to return to normal, the people watching this video are already miles ahead. You have the blueprint, you have the strategy, and most importantly, you have the truth. Don't spend another second listening to billionaires who forgot what it's like to have nothing. Their advice is meant to protect their massive estates, not to build your foundation. They can afford to be slow. You cannot. You don't need $1 million to start. You don't even need 1,000. You need the $100 currently sitting in your account. The iron will to stop trading your future for temporary comfort. The banks are buying. The elites are positioning. The world is re-indexing. The only question left is, where will you be when the dust settles? Will you be part of the collateral damage, or will you be part of the new class of owners? Start with your $100 today, not tomorrow, not when you feel ready, but right now. I am launching the 2026 Wealth Challenge. I want to see who is actually serious about changing their trajectory. Comments start below. If you are committing to investing your first $100 this month, I will be reading the comments and tracking this movement. And if you want to stay ahead of the institutional shifts and get the brutal data they don't. T-Show on the news. Make sure you subscribe for our weekly 2026 wealth updates. The system is rigged, but only for those who don't know the rules. You know the rules now. Go out and win.